What I do want to focus on is when thinking about exposure for small cap or micro cap, there's kind of this index idea, just own the market like we do with the S&P 500 or the Russell 1000, or are you going to screen away certain things? And in my mind, there's one product that jumps out ahead of the others in this idea, and that is the First Trust Dow Jones Select Microcap, in that it has a number of quality screens that it does on this space of the market. And as a result, if you look through to the underlying of the portfolio, it's a much smaller number of holdings. But really what I look at is over the last 12 months, are these companies making money? And when you look at FDM, 81% of the portfolio, companies inside the portfolio have positive net income over the past 12 months. Whereas if you look at something like IWC, 46%. So over 50% of the companies in that portfolio lost money last year. So there's clearly, you're buying speculative. It may jump in a market that's really beta driven. You might get more opportunity at IWC, but you are buying a lot of companies that are not going to be here in a few years. And that's just a simple result of passive investing on that large of a universe of small micro cap names. AVSC is pretty good. It's at 73%. And it's got an interesting overlay. It owns a lot more securities than FDM does. But I think just purely in this space, and I'll get a little bit more into it in mystery as I go along, but I like the screening methodology of FDM in this particular area, just from a standpoint of owning a little bit more quality names within the small microcap space.